and welcome back to the next episode of the Daily Currency Call with Forex Trading Asia. So, pretty big episode today. There was a lot happening very early in the morning, but first of all, it is episode 381 and it's the 23rd of September. And if it is your first time here, a big welcome to the call. And just a quick introduction. So this is the currency call, and we do this every Monday to Friday at 11 a.m. GMT plus 8 time zone. And the currencies we analyze are as follows. Monday is for Aussie and Kiwi, Tuesday, the Euro, Wednesday, the Pound, Thursday, Yen and Gold, and then Friday, CAD and crypto, specifically Ethereum and Bitcoin. So this is the currency call where you'll get market economic updates, key support and resistance levels, trade ideas, and much more, of course. This currency call is going to be very beneficial to both the long-term investors and the short-term traders. And here we'll go through what could move prices, possible trade ideas, and also we'll highlight the potential targets and risks as well involved in the trade ideas. A quick disclaimer here as well, which is quite important, so please focus on this. Any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades as well. And always feel free, guys, to ask questions as well in the chat, and we'll be very quick to respond as well. And any links that are shared as well are in the chat too. So if you are looking for the links that I discuss when I share certain things, that is where they are. So guys, just to start off the call today, we've got Kim Hong, currency strategist at LCMS Traders, and he'll be discussing what happened with the FOMC meeting and going into detail about the economic projections. So I know Kim Hong's excited to do this, so over to you now, Kim Hong.
All right, thank you very much, Scott. Okay, FOMC. Well, if you guys actually did tune into the currency call yesterday, then pretty much no surprise, right? I mean, I've already pre-warned you guys about what's likely going to be happening, okay? So the FOMC, okay, Federal Reserve, they held interest rate unchanged at the targeted range of 0 to 0.25%, quantitative easing remains unchanged at $120 billion per month, okay? Now, no QE announcements was made, okay? So what's the difference between this meeting and the previous one? This time around, okay, they actually delivered a hawkish tone, a hawkish statement. Let me just share my screen with you guys. Okay, so this is the rate statement, all right? I'll be pasting the link at the chat later on. So let me get the moderation. Yep. Okay, so this is the bond. Since then, the economy has made progress towards these goals. What goals? Okay, the goal of maximum employment and price stability. Okay, so since then, the economy has made progress towards these goals. If progress continues broadly as expected, the committee judges that a moderation in the pace of asset purchases may soon be warranted. Okay, that is the hawkish point that the Federal Reserve delivered. Okay, basically, yes, we do not make any announcements on tapering. But if the dual mandate, maximum employment and price stability were to further improve, then we can actually taper back our quantitative easing, which is the assets purchase being mentioned here. That is the strong point, So basically that's all for the rate statement, It's just the rate statement. It's not the end of everything yet, all right? During the press conference, Jerome Powell, the Fed chair, he actually mentioned this, I probably got like several things to quote today, all right? The first thing to quote, while no decisions were made, participants generally viewed that so long as the recovery remains on track, a gradual tapering process that concludes around the middle of next year is likely to be appropriate. You see, the difference between this time round and the previous meetings with an S, is that a timeline, a vague timeline, I would say, is being given, around the middle of next year. Okay, tapering process concluding around the middle of next year. Okay, it's likely to be appropriate. That is, of course, provided that the members' view are positive. Okay, for the next few months. Okay, leading up to next year. So that's the first quote. Okay, on inflation. Okay, this is Powell's view on inflation. All right, I quote: "For inflation, we appear to have achieved more than significant progress." All right, more than significant progress. Substantial further progress. Okay, that part of the test is achieved in my view and the view of many others. So it's no doubt that inflation has already been I would say the conditions for inflation to make substantial further progress has already been met. Okay, in fact, already exceeding the central bank's target, I would say. Okay, so that's for inflation. Now, on employment, okay, Powell said that, okay, I quote, "For me, it wouldn't take a knockout great super strong employment report. Okay, it would take a reasonably good employment report for me to feel that that test is met." Okay, that test of achieving substantial further progress in the US job market is met. All right, so I mean, early on this month we see pretty, I would say, disappointing jobs report coming out from the Bureau of Labor Statistics. Okay, so right now, for Powell to come and say, I don't need an outstanding, a super strong report, for me to be convinced that the condition has been met. Okay, this kind of like, I would say, create some relief in the market. Okay, in terms of the previous poor, disappointing figures, jobs figures. Okay, so for the upcoming jobs report, of course, ideally, it would be good if we can, have like at least some 700 over 800 over 1,000 jobs being created per month. Okay, but if it actually falls slightly short of those figures, okay, those expected figures, chances are Jerome Powell is going to close one eye. He's going to make some leeway. Okay, so that's for the press conference. Now, the next thing that I want to go into, all right, is the quarterly economic projection materials. Okay, so just get it back again. Okay, so what you're looking at right now is the quarterly economic projection materials. Okay, so let me just go straight first into the dot plot. Actually, you know what? For the dot plot, all right. Sorry for all the screen sharing, but yeah, I just sort of like put together two screenshots, which I believe will help. All right. So what you're looking at right now is the dot plot from June 2021, okay, previous release, and the one that has been released earlier on today. Okay. Now, as I've mentioned, the attention will be on whether, okay, dots has been moved, okay, from the bottom to the top or the top down to the bottom. Now, let's start with 2022. Okay, 2021, all members pretty much expect interest rate to hold unchanged. Okay, so no surprise over there. Now, focus on 2021. Now, I did some calculations. Okay, so previously, 11 members, okay, over here, 11 members actually expect interest rate to remain unchanged at the current level for 2022. However, okay, early on today, we see that only 9, okay, only 9 members are expecting interest rate to remain unchanged in 2022. That means 2 members actually projected that projects, okay, that interest rate will be higher than this range, which is a hawkish move, hawkish tone coming out from the economic projections. Okay, so as you can see, previously I think there was like 2, 4, 5, 7 over here, 7, and then versus 2, 4, 6, 9, right? So from 7 to 9 members expecting higher rate, which is good, right? 2022. Now, what about 2023? There's only like 5 previously. right now there's only one member, okay, expecting interest rate to be higher, or to be at the same level, to remain at the same level for the year 2023. Probably some super dovish member from the Fed, okay, which unless they actually admit to who they are, okay, we won't know who they are. All right. So, you know, overall, from this projection material point of view, dot plot point of view, it's very hawkish. It's definitely very, very hawkish coming from the Fed. Okay. Now, back to the projection material. One final thing to share. It's the economic projections. Okay. So, overall, I would say that the economic projection is quite positive. Okay. Now, starting off with something that's not very positive. All right. GDP. In June, they actually project 2021 GDP to be 7%. Okay. Right now, they actually project a lower 5.9%. Okay. Economic growth is expected to grow at 5.9% as opposed to a higher 7% previously. Okay. Well, actually, this doesn't come as a surprise, to be honest, all right? Because, you know, with the whole Delta variant hitting and things like that, you know, the uncertainty caused by COVID, okay, we can pretty much expect economic growth to slow down a little, all right? So that's for 2021, okay? Now, if we were to look at 2022, they are actually expecting 3.8 as opposed to 3.3, all right? Then for 2023, it's actually low increase as well, 2.4 to 2.5%. Okay. Unemployment rate, okay, unemployment rate actually increased as well. All right. So it's not very good for this year, which is again, you know, due to the lockdown measures. However, for 2022 and 2023, it actually became better. All right. Well, not became better, but remained unchanged. Okay. While inflation-wise, it actually improved. Okay. Due to, you know, the spike in inflation, as we have seen from the data. All right. So overall, we are seeing very positive data coming out from the economic projections. Okay. So I would conclude that the USD is likely going to remain strong for the short to medium term. All right, because of the hawkish message coming from the Fed. Okay, so the Fed will be meeting next time around in November. Okay, this gives them more time to look at the jobs report and the inflation report. Okay, so well, hopefully they will be making an announcement on tapering in November. All right, so that's all I have to share for the what's this, US FOMC. Okay, next I will be talking about the Bank of England. Okay, from one central bank to another. The Bank of England will be meeting later today at 1900 GMT +8. Now, what to expect? No change expected. Okay, no change expected. However, pay attention to the potential hawkish tone that may be sent out by the central bank. Okay, now recall that recent inflation, okay, recent data release was actually very high, 9-year high of 3.2%. Okay, so we would like to see if the central bank will respond hawkishly towards this piece of strong data, inflation data. Okay, and remember that during the previous meeting back in August, you know, half of the committee members actually felt that the minimum criteria for consideration of a tighter monetary policy has been met. Okay, so it's, I would say, kind of a exciting thing to wait and see what the central bank will be announcing this time around. Okay, the Bank of England, because they have been doing almost nothing for the past few monetary policy meetings, right? So this time around, you know, with this high inflation report, I would love to see something hawkish coming out from the Bank of England. Okay, but expect no change in interest rate, no change in QE, no tapering announcement from the central bank. But, you know, hopefully they will give us some insights, okay, into whether or not a tapering is warranted or soon to be warranted, which may be carried out maybe during the next meeting, okay, or later on in the year. All right, so that's all I have to share for the Bank of England. And one more thing, okay, one last thing. Swiss National Bank will also be meeting today. Okay, yeah, no change as expected. All right, in the first place, the Swiss National Bank has no quantitative easing, so well, we wouldn't be expecting anything from coming out from them as this time around, all right? Or maybe even for the next few meetings for the rest of the year, okay? So Swiss National Bank, yeah, unlikely it's going to affect francs, all right? But remember, with the whole, uncertainty dramas going on, Evergrande, Delta variant and things like that going on, the Swiss francs may actually be moving because it's actually a safe haven currency, all right? So in terms of uncertainty, like right now, we may actually be seeing a strengthening in the Swiss francs against the riskier currencies like pound, euro, New Zealand dollar, Australian dollar, Canadian dollar, okay? So yeah, unlikely the Swiss National Bank's meeting will impact the Swiss francs, okay? It's more like the current affairs going on around the world, political turmoil and things like that, that's going to move the Swiss francs, okay? So with that, yeah, that's all I have to share. Come back tomorrow while our breakdown on what, going to take place later on at the Bank of England meeting, okay? With that, I will hand it back to Scott.
Thanks for that, Kim Hong. And just a quick recap as well. In the chat here, the live chat on the Zoom call, got a few video links that I've shared for the Facebook, not the Facebook, the YouTube page for LCMS traders, just on what Kim Hong did yesterday as well, just to give you insights into, we did definitely discuss all this in detail as well. So something to pay attention to with the YouTube channel. If you can't make the live call here for the daily broadcast, definitely check that out as well. And also Kim Hong shared that FOMC rate statement and also the projection material as well that we went over. And I've also finally shared, there was a pound trade idea shared yesterday by Jin. I ask you to just check that out as well, because it does look like we could have some potential here as well with that. But it is Thursday, guys, and I will share, just to begin the analysis, the US dollar index to start us off here before we get into the yen and gold. So I've got the chart up here thanks to Sam Trade, and this is the 1 hour time frame. I've just got it up here for the 1 hour just to show you we have, it's obviously during the Asian session, and typically what we'll see is that if we have a big move overnight, like we did see on the US dollar, we'll see a little bit of a pullback take place, which honestly coincides quite nicely as well with what we are looking for, trade ideas. But I just want to go to the 4 hour as well, just to give a little bit of context in regards to previous points of resistance. Now, we have seen the US dollar get as high as the 93.70s. We haven't seen that come about, although frankly, it did move, pretty aggressively as well on the back of what, was mentioned, but it wasn't anything that was too dramatic. I mean, if a taper was discussed even earlier than November, then we could have seen, and that's what people were a little concerned about. And there's been some factors there with the equities pulling back, but we actually saw a stronger US dollar on the back of those comments. And then we also saw the US equities actually, they sort of bounced back a little. They have been selling off, I think it's around 5% from the highs seen recently. They did, rally a little bit last night, but anything too dramatic. So what I'll get into now, guys, we will go and have a look at the economic calendar, because we do have the yen and gold in focus today. And we've got the economic calendar here with Forex Trading Asia. So I'll make sure I send the link for this as well. Highly recommend checking out. There's some good articles. If you like them, you get points for doing so, and you can accumulate enough and you can get a $20 Amazon gift card. So we'll just go to Wednesday briefly. I just want to touch base on the Bank of Japan monetary policy statement as well. And a lot of this was very much uneventful for the Japanese yen. Nothing dramatic was mentioned. And we'll go down now. Obviously, we had the FOMC, which was mentioned in detail by Kim Hong as well. We do replay this episode and we post it up on the YouTube channel as well. So please check that out. I'll post links for that as well after this. So for today, we have the public holiday for Japan. And we do, as Kim Hong mentioned as well, we do have high impact pound news too. So from a US perspective, if we're looking to trade, for example, the USD yen, there's not a lot of high impact news out today after obviously the FOMC. And it just takes a bit of time for the market to digest what has been said. And you'll notice that there could still be a little bit of volatility. So in regards to the yen pairs, what I'll focus on now is this pound news. So we discussed this yesterday. Jin in particular mentioned at 7 o'clock tonight, GMT +8 time zone, we've got the Bank of England QE totals. And what we're looking for is 875 billion is the forecast. If that comes in a little bit less, then that could be quite bullish for the pound. And anything in regards to what Kim Hong mentioned just before with any hawkish tones, and there's also an article I'll share from Forex Trading Asia that was put out by Kim Hong. This talks about anything hawkish out of the Bank of England. But again, it's not looking likely, but I'll go down to the charts here and we'll just go into the first trade idea. And it is a yen pair. So we'll start off with the pound yen just to go with. So we are seeing it is resting against support at 14939. And what I'll do, I'll just zoom in a little. So as you can see, price is consolidated here. We have seen a little bit of choppy price action. You tend to see that on the pound yen as well. Now, this is the 4-hour time frame. And it's actually, ideally, if we could just sort of hold this level, and if we do get some hawkish or even slightly hawkish news, given the fact that the yen is quite neutral right now. Now, obviously the yen is a bit of a safe haven currency, but it looks like Kim Hong also mentioned about the Swiss, and the yen just doesn't seem really to be as the go-to other than the US dollar. The US dollar is really seeing that inflow when the safe haven situation is on. And frankly, right now, we're going to have to wait and see what happens with the US Open, which is 8 p.m. For FX markets tonight, GMT +8, just to see what we get here. So for a trade idea, we are about 40 pips or so off that support level. You know what? Even if we get a slight pullback, would be fine. But hypothetically, if we enter here, if the price maintains here, let's say to keep the math simple, an entry at 149.70, we've got a 40 pip stop loss, which would put us down to pretty much just above the support level. And then we've got a lot of room in the upside. Even 80 pips is very doable. Again, though, it's dependent on that news event. And it's, you know, the point to note is 7 o'clock tonight, GMT +8, but it's a 1 to 2 risk to reward ratio is, you know, very possible. So we've got a 40 pip stop loss, 80 pip take profit on the pound yen is something that is definitely worth paying attention to. And again, guys, if you are in the LCMS Traders Club, in the lead up to these things, if anything is seen that's promising from a trade perspective, it will be shared in the chat as well. So make sure you are around, you've got your notifications on as well, because we'll be sharing anything that we do see. All right, so we'll go now to the USD yen. And as you can see, on the 4-hour, we're not looking as promising from a perspective. So if you're saying, what do you mean, Scott? I'll share this link as well. You've got to be aware of the 5-step checklist as well that we use at LCMS Traders. So, but just looking at this, it's very range bound. So it's a tough situation for the USD yen. And I'll just put it simply, this is not as a great opportunity as the pound yen. As simply put, if you are a beginner trader, that's just the best way I can put it without going into too many details about why, but not really a great opportunity. So honestly, I'd say leave the USD yen. I mean, if you follow the USD yen closely, you can trade it, but I just see it's quite conflicted. And the reason why I say that is if we go back to the US dollar. Now, if we had a very hawkish set of comments from Jerome Powell about, you know, we've got a real big situation, we've got to taper ASAP, and we punched through 93.70 odd, which is a significant resistance level, then I'm like, you know what, USD is strong, but it's a bit conflicted, and it looks like we might even see it calm down a little. So an immediate trade idea for tonight would be that pound yen. Now, let's go to the euro yen, and then we'll head to gold. All right, so again, guys, no trade on the USD yen is how I'm looking at it. Now, euro yen is similar than the pound yen, although the main catalyst for tonight is the pound news. So the euro yen might be a little more subdued, and Jin talked about the fact that the euro potentially could be a little weaker, but that was against the pound. So again, with the yen on holidays, it just means that it's sensitive to any potential good news for the euro. So I want to go back to the calendar here, and we'll quickly just touch base on the euro news. So for today, now this is GMT plus 8 time. We do have some manufacturing PMI data out, service PMI. So there is stuff that is there, but again, you've just got to be mindful. So if something's called out, you've got to be really there to take the trade, because if it moves 10 pips or so and you're chasing the entry, that's not advantageous, because you've already, it could move 25 pips or so, you're already 40% of the trades happen. So you've got to be aware of that. But I'll go back to the chart, and just to reiterate the euro yen as a trade idea. So again, if we can see this hold up here, now I'll just get the crosshairs and let's just work this out. So honestly, we've got around 60 pips to that resistance level at 12913, but it's a 1-to-1. So if it can come back down a little bit during today's session before that news at 4 o'clock in the afternoon GMT plus 8, then even if we get down to the lower 128s, maybe 128.30 or so, and then you've got a little bit more room there. You've got 90 pips to the upside, 30 pips on the downside. So for the euro yen, if we can see a little bit of a pullback that we've seen earlier, then an entry at around the 128.30s, 30 pips stop loss at that support level, and then a 60 pip take profits fair. I mean, we haven't really seen big moves over 60 pips recently as well. So that's why I say, if you've got a 60 pip winner, and Jin mentioned this yesterday, take some profit, or if the whole thing, because it's just challenging market conditions, that's all. All right, so we'll go to gold now. And this has been interesting and frankly, a little stubborn as well. So I do know there's quite a lot of people that like trading gold. I don't trade gold, but our observations are more longer term positioning for gold. So that's what we're referring to here. So let's say you saw the bounce, you're in the long, your risk shouldn't be a lot. And if it is, frankly, I would say, look, take it off, because there's a lot of jitters and uncertainty going on, and we haven't seen gold behave as it would normally. But let's say we see some settling down and we see gold pop back over 1,777 support. But what I want to see is a candle closing near the high on the daily, such as a candle like this that we saw in August. That was the 23rd of August. But again, it really just seems to need a breakout properly, and the catalysts aren't quite there right now. So I would say we haven't really seen panic in equities. So I would say leave gold for now. If you're already in gold and you've been in for a while, leave it be. But we just need to see a little bit more market selling off in equities to really cause that high degree of uncertainty. So for now, unless gold can really make a push higher above 1,777, no trade there. But those are my thoughts, guys, on the yen pairs and also on gold as well. So up next, guys, we have Daniel, the senior trading coach at LCMS Traders, and he'll just be going through what happened last night in the live trading call, which is available to all members of the LCMS Traders Club, and just detailing a little bit more for anyone interested to learn about the club as well. So over to you now, Daniel.
Hey, thanks, Scott. So great analysis, by the way, Scott and Kim Hong as well. So really last night at, just for everybody to know that, on Monday and Wednesdays, Monday, 8 p.m., we have a group coaching sessions for all the members where we see what happened last week, what's happening this week, and then what we could be trading preparation. On Wednesdays, we have live trading sessions at 9 p.m. GMT plus 8 for all the just club members alone. We come together, we look at the market, what could be happening, and where we can trade together. Of course, but last night, it it is quite muted because of FOMC coming early in the morning, the next morning, 2 a.m. Wow, this is expected. It didn't really move. And it was really a time where, you know, you could really, we talk about it, coaching as well. And we talk about, you know, this is the real time to not take any trades. Sometimes it's really very difficult by the discipline to do it. That's where all the community comes in here, get together and help each other out, and we stay out of the market. But what we did was we prepared the market, right? We prepared the trades. What kind of popular trade ideas that we had on Monday? Is it still valid? Is it moving on? Is there new trade ideas coming in? And how do we, coming closer, what do we wait for FOMC for those who wants to be trading the news at 2 a.m. This morning, GMT +8, right? So it's really very interesting there last night. Lots of people asking lots of questions, you know, FOMC, you know, Bank of England, what do we prepare for? So maybe let me do a quick sharing. You know, I won't share everything because everything, but it's actually especially for the club members alone, right? It's not a club member alone. But one of the things we were looking at was the US Euro USD. Now the Euro USD has a really nice strong channels coming in. Then you know, there were Monday there was signal, not say signals, but the trade idea coming in to sell below 1.1720 comes back down and it just moved across, right? It triggered and moved across. Was it still valid? So the questions that we have was there the signals, right? So about the trade ideas, sorry, not signals, but coming in, we will look at it, analyze together, and with the most likely the hawkish statements coming in, there were some few questions. If you have already in the profit, you're not taking the risk, you could exit out with a small profit. Else, you know, you want to take a risk, but with the you know, fundamentally, we know that most likely it's going to be hawkish statements. Hopefully, then we will hold on to the trade, and we say how long for the hold on. So we still hold on to below 1.1720. If we cross below that and close, look at that here, we possibly take a trade and looking at short-term wise coming in. You know, we were saying that if we close below that, really very nice trade happening, and it did that. You know, it did really that continuously with the hawkish statements. Kim Hong already mentioned a hawkish statement, and it came back down, and more or less, we try to close the trade for the night because of news trading. So it's something that we prepare that as well coming in, and of course, people ask a lot of questions that they had in the trade. You know, there were no live tradings done last night, but there were a lot of questions, like, you know, for club members alone, they had some trades. What should they be doing? You know, what's my views? What's everybody's views coming in? We have lots of questions from there, and we answered that. So I really encourage everybody to join. With quite a nice group. We have more quite a big group in LCMS Traders Club joining the sessions and making use of the community here and the coaches to when they are trading and to build the confidence from there. Now, this, if I were to encourage you, if you are already not in the club, I will advise to maybe just come and join us. You know, go and join us here at the club. All you need to go is I'm sure the link will be pasted in the chat here. Go for tradersclub.lcms.com.sg. Come down here. We not only have the group coaching sessions here, we have many more beneficial things for you in trading. You know, we have a snapshot of, we have long-term and medium-term trades in the Market Watch list there. Coming in more trade ideas for the long term, especially if you're busy, you know, you want to take a look at trade ideas. That's one. We have a short-term trade ideas for the community as well. So we have short-term, long-term, and in fact, we have also have signals coming in at the point of moment where we will look at the thing for the day trading itself. So we can take a look if you want to take a trade, you think it's good, we can do so, but we don't leave you alone. For Forex signals, right? For Forex signals coming in, we don't just leave you alone. We actually give you the analysis behind it so that if you agree or not, that'll be great. You know, and one of the things that we have the club is that the Forex signals actually gives 5 minutes earlier than the free channel in the Telegram channel. So, you know, that's why it's most important. You want to, if you look at it, look at the analysis. If you agree with it, then you can enter the trade as well. So it simplifies your analysis and do your trading as well. So we have also not only that, group coaching sessions, live trading sessions, daily analysis, and so much more, so much beneficial to you. Now, if you really you're serious and in your trading here, you know, and want to achieve your best, I really would suggest you to sign up right now. $49 a month. click it in here right now, and this, and you get a bot, and I'll see you in the club. See you guys.
All right, thanks for that, Daniel. And I have shared a few more links as well, just in the chat for anyone that was referring to what I mentioned about the 5-step checklist as well for the Optimus traders that we do follow the methodology. We do have the Forex Trading Asia site as well for you to check in and sign up for an account, all free. The link there for the Optimus Traders Club, and also for the managed account service for ForexBriefcase that we do offer. We have that, the link is there, and we're pretty much at 100% returns now for 3 years. So if you are looking for that option to invest in Forex as well, but allow the professionals to take care of that, we do offer that as well, guys. But that is the episode for Thursday. Thanks for watching, and I hope everyone returns tomorrow for the CAD and crypto analysis. Bye, guys. Thanks for watching.